Pinterest is the latest social media platform to report slowing earnings. And it's really just following a trend that we've talked about in previous episodes around what is probably an inevitable slowdown. And also continues kind of that thought that the first place that companies will typically pull back on their spending when things get a little bit rough is in advertising and headcount. So Pinterest, in their latest earnings call, their CEO said that, they're going to shift to focusing on profitability, which is another signal to the market that, okay, we understand that there's a slowdown happening or there's something going on in the markets, and they're going to focus on cash. And something that James talks a lot about on his channel and in conversations that we have privately around business, that in when things get volatile like this, when the economy kind of starts to sink, the companies that have the ability to show that they're able to generate cash, because cash pays the bills at the end of the day, are the ones that typically last the recession after recession, or they're at least sustainable. Pinterest here is it's one of those companies that, of course, is heavily capitalized. I mean, it's a public company, but at the end of the day, it also gets most of its revenue from advertising. And so, as we've seen Google and all these other kind of ad-driven revenue streams fall a little bit in the last couple quarters, I think it's no surprise here that Pinterest has seen its revenue growth slow. It's reporting its lowest revenue growth in 2 years. Interestingly, though, if you looked at its stock price recently, I haven't looked at it just yet, but I looked at it a couple days ago. Elliott Management, the activist investors, decided to take a 9% stake in Pinterest, and that's catapulted its stock price up. So the stock price is kind of disconnected to what's actually happening in the economy. So if you went to look at Pinterest stock price and you saw it 15% up above where it was even last week, that's why. It's not because there's anything actually fundamental in the economy or its business model that would warrant it being that much more valuable. It's the fact that anytime Elliott goes into a company, it typically sees a lift because shareholders feel a sense of, okay, Elliott can come in and at least shake things up and see if we can put the company on a better path. In terms of just optics and in terms of what the company's CEO has kind of signaled to the market, I think it's the right approach in terms of signaling that, hey, we're going to try and focus on profitability here. There's a quote in the article that says, I do not subscribe to a, quote, growth at all costs mentality. That's what the CEO said, quote unquote. And I think that, that's the stuff that is probably going to be able to, if they're able to actually execute on that and get to cash flow and get to profitability, I think that's probably a better way to go about surviving this downturn. But with Elliott going in there and with the stock price where it is, it wouldn't surprise me if this becomes an acquisition target for some other platform or some other company that is attracted to a kind of an ad-driven revenue stream. So that's an interesting other tidbit, I'd say, when I read this story that I thought about. But the main gist of this episode really is just that here's another shoe to drop in the tech space, the social media space, the ad-driven revenue model space, that shows that companies are pulling back on their spending. It's not Google that typically will get hit the hardest when there is a recession or there is a downturn. It's these kind of peripheral social media platforms where companies put kind of experimental marketing dollars to. Like Google, of course, is one of those where most digital companies, or if a company that has a digital footprint will pay that tax, so to speak, to have a footprint on Google. They may pay that tax to have a footprint on Facebook, but these kind of peripheral ones, Pinterest, maybe like podcast advertising, for example, all these kind of peripheral advertising methods, they're the ones that get pulled the hardest first, and then you'll start to see kind of everything else fall. So this is just another shoe to drop in kind of the larger game here that is an economic downturn.